Hello, my name is Thomas Gober, and I'm a certified fraud examiner and forensic accountant. I specialize in corporate fraud, especially insurance company accounting fraud. For over 20 years, I've worked very hard to protect policyholders, beginning way back as an insurance examiner for a state regulator. I try to look after the policyholders when they're abused or defrauded. As a forensic accountant, I do to a large set of financial documents what a forensic pathologist does to a cadaver. I try to figure out what happened, who did it, where'd the money go, and basically how did they cook the books to cover up the fraud. I love my work. I've had the pleasure of working with the FBI and the U.S. Attorney's Office on a series of very large, complex insurance company fraud schemes where insurance companies have collapsed. When I say criminal case, I mean with prison sentences of the executives, not just paying back money that was stolen. In those cases, when we recovered the money, that money went to the policyholders who had lost everything. Today, I'm unfortunately faced with sharing some bad news with you. As you know, AIG, the American International Group, is under an $85 billion bailout. And it's serious business, and I'd like to help you better understand it. But I'm not a doomsayer. I do not intend to sensationalize anything today. The topic itself is sensational enough. Throughout my career, I've learned that often the greatest lessons that we can learn are at the toughest times, the most painful times. So let's please learn an important lesson from this very painful economic moment. In addition to being a certified fraud examiner, I have served as an expert witness and consultant for more than 20 years in the field of insurance and reinsurance. In this video 1 of 3, we will talk about how insurance companies have an obligation to tell the truth in their financial reporting. If you see the value in this video, please review video 2, which will have a greater emphasis on some very arcane and secretive accounting fraud schemes. Now, this is very important from a professional standpoint. I have to emphasize that in assisting the government with these very large criminal investigations, I'm bound by the federal grand jury secrecy. That means that what I've learned solely through the grand jury process will not be disclosed here. Any specifics that I discussed today will be limited to already public information. This video is being filmed on September 18th, just a couple of days after the announcement of the $85 billion bailout of AIG. I get the greatest satisfaction from my work when I see that I've truly helped a policyholder, and even better when I can help many policyholders at once. Insurance is a very special product. You pay and you pay and you pay premium dollars often for your entire life, and in return you only get a promise. Promise that if you ultimately have a covered claim and you're paid up, they must pay that claim. The problem is they have to have that money for years and years kept safely and invested legally in order to be able to pay your claim if they so choose. It's that special relationship of trust that imposes on an insurance company an obligation of truthful financial reporting in their financial statements. This is the foundation of insurance accounting. No one should argue that point. So the bad news is that what was the world's largest insurance company is now a very troubled insurer and the subject of a huge $85 billion bailout. So what is the good news? The good news is that this incredibly painful and embarrassing collapse has finally awakened us to the fact that it is essential that we be able to trust our insurers in their financial statements and they be truthful. Who could benefit from these videos? Anybody who currently has insurance or might need to purchase insurance. Anyone who relies on the integrity of their insurer. everyone who is responsible for truthful accounting. And now, because of the bailout, everyone who is a United States taxpayer. The media has just begun to tell the story about these insurance problems. There have been certain insurance companies that have not reported truthfully their financial condition, and now they are in serious trouble. You might ask, how did it get so bad so quickly? I'm here to tell you that it did not happen quickly. This has been tucked away in financial statements that are far too indecipherable and have been that way for years. Several factors led us to this point, some of them political in nature. First of all, inadequate regulatory oversight of insurance companies. Second, these pervasive accounting schemes have not been limited to insurance companies. They've been throughout the industries in the United States. It's simply spilling over from one industry to the next. And I base that on a significant failure to emphasize ethics in corporate America. In recent years, the United States Department of Justice has not held corporations accountable for their criminal behavior and betrayal of the public trust. And finally, state Supreme Courts have repeatedly failed to punish insurance corporations when they have abused their policyholders in the civil courts, not just the criminal courts. Just this year, in 2008, executives of AIG and a reinsurance company called General Reinsurance were convicted of criminal charges related to a very serious financial crime referred to as reinsurance fraud, or more specifically, side letter fraud. In this particular instance, those schemes began in the year 2000. In fact, just later this month, those executives are facing their sentencing, and jail times will be significant. This has actually received very little mainstream media coverage, much to my surprise. The important point here is that the convicted executives were AIG executives, the company we're talking about today on the bailout. If you would, please take a moment to review just a few excerpts from that actual indictment. I've used an actual filed copy. It is certainly a public document. When you see quotation marks in this indictment, you know that these are direct quotes of the indicted and now convicted AIG and Gen Re executives. On this slide, if you will notice near the bottom of the screen, it refers to we are, in parentheses, AIG, going to get spotted at the end of the year. How do we avoid that? Oh, well, let's just take in some more reserves and some more premium, and we'll do a bit of, fancy accounting work. The next slide, near the bottom, where it says Holdsworth replied, quote, if there's enough pressure on at their end, they'll find ways to cook their books, won't they? And then, in substance and in part, it's up to them. We won't help them do that too much. We'll do nothing illegal. At which Monrad laughed. The next slide near the bottom, and again, these are direct quotes from these executives from the federal indictment. During the conversation, Monrad mentioned previously discussing an offshore structure for the deal with Graham. Monrad commented at one point, in substance and in part, quote, these deals are a little bit like morphine. It's very hard to come off of them. The last slide, you'll see that the CEO at that time of Gen Re, Ron Ferguson, says, note to all, let's keep the circle of people involved in this as tight as possible. We're talking about a reinsurance transaction that is supposed to be entirely public, filed with the regulators, and he's telling it to keep it secret from virtually everyone. If he keeps it that secretive, how can we possibly expect the auditors or the regulators to find out?